So I guess speaking on, I suppose, on behalf of the banks team in North America, they had signaled that that was quite likely, maybe. And now I don't know whether it was the rumor was already in the market, but they had suggested that a cut was likely given what they were seeing in the markets. But in terms of the extent of the cut and how successful it will be, I think it remains to be seen.
Well, ever since we know about the 50 basis point, is it right that officially we are entering the gate of the low rate regime? And when we talk about entering the gate of the low rate regime, how low can we be on the global scale? Speaking about the ideal bank rates.
So I guess when central banks take these decisions, they don't take them lightly, and I think they take them with the understanding that there is only so much ammunition that they have on rate cuts or rate hikes. So I think particularly when you're cutting rates, you can't, it's not an infinite source. But I think it's not unreasonable that we should expect that perhaps other central banks around the world have cut and have followed then in terms of the Fed, and we could certainly expect some more cuts, and including with Bank Indonesia. But as to when and to how much, I think I'll leave that to my colleagues on the economics team to advise us on that.
As you pointed out earlier, it is also likely and possible for our central bank to do another cut rates. They still have room for that. But the question is, anytime our central bank do this kind of cut rates, there is a lagging time for the banks in general to adjust the rate. What is your take on this? Like, how do you see the tone later on when Indonesian central bank will do another cut rates? Ever since on the field, we still have the lagging time to adjust on our banks.
Yeah, so I think I think central banks are a bit they're on the defensive versus trying to calm the markets and investors. For Indonesia, the rate cuts that we saw around the third quarter of last year, as you mentioned, it takes some time for the full benefit of those cuts to feed through, and that's typically between 3, 4 to even up to 6 months. So we've now got the coronavirus issue, so that potentially can negate some of the positive benefits from those earlier cuts. And likewise with the cut at the end of last month, it will take some time. But I think one of the reasons why perhaps the cuts towards the end of last year perhaps didn't give enough or as much impetus as it might otherwise have was because I think banks were looking at loan growth in the fourth quarter of last year. If you recall, in the previous year, loan growth had been very buoyant in the last quarter. So I think banks were probably looking at a similar situation in the fourth quarter of 2019. That ultimately didn't happen. So I think as a result, we're probably likely to see banks be a little bit more aggressive on cutting their deposit rates if they're now more confident that loan growth is likely to perhaps disappoint in terms of expectation.